Welcome again back to CryptoJet, holders, shillers, and my fellow crypto degenerates. Make sure to leave a like, subscribe, and hit the notification bell so you never miss out on the best crypto news, insights, and of course, my beautiful voice. Now let's get straight into the video where we're talking about Vechain sitting conveniently at a price of exactly $0.1 at this point. It went from a higher ranked coin to a little bit of a lower ranked coin in this recent correction in the market. And by recent, I mean in the previous 4 or 5 months since the, pinnacle of the bull run actually came until now. That is because I firmly believe we're actually going to go even higher. But right now we can see crypto slowly nearing back to the 2 trillion market cap level as it was a few weeks back in the glory days of cryptocurrencies. Vechain's market cap is at 6.5 billion with a total of 9 billion if all of the coins were in supply, and you can buy this coin on all of the largest exchanges except for Coinbase for some reason, Binance being the largest one, and obviously Binance US, KuCoin, and Huobi. So moving straight onto the chart, we can see a lot of bullshit that I actually drew some time back, so we're going to remove these drawings and do everything from scratch so you can see how I make my analysis. The first thing that I do see is a nice price floor that's formed the previous time when we had the largest correction of this year, after the largest growth of this year as well. So we had a very strong rejection from the buyer side down at this zone. It created a price floor. Essentially, every time the price came down here, buyers entered a period where they were stronger than sellers, pushing the price back up. Happened once again, price was pushed back up, and once again, and then we started emerging from this big downtrend and slowly entering a period of a continuation of the bull run. Now, we have a few mid zones that I like to plot out, but the most important one that I see is we actually found significant resistance at the $0.15 mark. For some reason, it could be a psychological reason, it could be just simply a lot of profit taking at that point, which did happen as with the whole market. People just started taking profits at some point a few weeks back, a week or two back, you know what I mean? And then prices sort of dipped a little bit lower. Now, if you move on to a lower time frame, we can actually notice a nice zone of support forming right here where the price is currently rebounding from. So on the lower time frame, we can plot it as a little bit of a larger zone. It's something like this. So it doesn't have to be perfect. As long as there's a zone where price actually rejects from, it's a valid one. So price rejected from here, price rejected from here, price rejected from here. So it's a valid zone of support, and currently it's rejecting from right here. On the daily time frame, we can see a bullish engulfing candle, quite a big one from yesterday. So it's very clear that we are actually on our way to continue moving more bullishly at this point. Now, if we do take our Fibonacci tool and plot it out, we can see that we've actually exceeded the optimal level of retracement, which would be the 61% area. However, we're still not below the 78%, and we're still not below the 200 period moving average, which means that we still have support from a few areas and still are very likely to continue moving bullish. That would be it for today's video. Thanks for watching, everyone. Make sure to subscribe and leave a comment if you want to see anything else specific in the future. Until we meet again, hodl for dear life, and I'll see you all in the next one. Adios.